Hello, world. I've been getting a lot of questions about income over the last year or so. I mean, pretty much as long as I've been a loan officer. So, here I want to talk to you today about Schedule C filing on your income taxes. This is for self employed people, if 1099, if you have a sole proprietorship, if you have an LLC and you're the only owner. This is probably how you're going to file your taxes. And this is what we're going to use this document behind my big head right here is what we're going to use when determining what you qualify for as a self-employed borrower. If you know, let me show you here. This is the document that we look at. Usually, if you're self-employed, depending on the years, but most of the time, we're going to look for your 2-year history of this document. It's going to simply spell out what your business is, who you are, how you file, and obviously how much you make. So we've always had people come in saying, I did $200,000 last year. But $200,000, if you put it in here, is just your gross income. Then you have all your write-offs and what you actually paid. So this is just a starting point, but as you go through and you have your write-offs that you do with your CPA, things are going to come up. Like you have your car expenses, advertising, rent, all that stuff. It can all be written off because it's not earned income. At the end of the day, you have to use that stuff to run your business. So your actual final number is going to come down here, your net profit. That's what we're going to use. Your net profit. So in this case, say you wrote off $100,000 worth of stuff, is $100,000. So you did $200,000 worth of business, but your actual net that the bank can use in determining your eligibility for your debt to income ratio is 100,000. All we do, pretty simple. We take off all your write-offs. We add them, anything we can add back in, like depreciation, we'll add that back in. For the most part, we get this net number of 100. We divide 100,000 by 12 months, comes out to $8,333.33. That's your gross income every month. From that number, that's what we determine what we can use for your debt to income ratio. So pretty simple. If you're a loan officer, or if I ask you for your Schedule C income because you're self-employed, this is the document we're looking for. It's usually fourth or fifth document on your federal tax returns, and it spells out what your actual income is with your business. This is going to help you if you know what it is, or if you want to buy a bigger house, or you're making more money. You got to show that you have that money made, that is earned income every year. And this is how you show it. So that's it. That's how we determine if your income as a self-employed borrower for most of the time. Sometimes you'll have like a K1, you'll have different types of income, but this is a basic sole proprietorship. This is what you're making. All right. Hopefully this helps when you guys go out there and file your taxes and want to determine what you can afford.